What's up everyone? Welcome back to the channel. Today we're diving deep into the silver market because wow, things are getting wild. Silver prices have been on an absolute tear, hitting multi-year highs and leaving a lot of people wondering what on earth is going on. You've probably seen the headlines and the social media chatter. There's a crazy rumor flying around that a massive short position by a major bank, specifically UBS, is about to blow up and send silver to the moon. Is it true? Are we on the verge of a historic short squeeze? Let's break it down. First, let's address the elephant in the room, the UBS short squeeze rumor. The story goes that after acquiring Credit Suisse, UBS inherited a gigantic short position on silver. The theory is that this position is so massive, any significant price rise could trigger a cascade of losses, forcing UBS to buy back silver at any price, creating a legendary short squeeze. It's a dramatic story and it's captured the imagination of many investors. But here's the reality check. There is very little concrete evidence to support this claim. Think about it. Where did this information come from? Mostly from anonymous online forums and social media posts. The official data from sources like the COMEX doesn't show a single entity with a short position of that magnitude. While banks do hold short positions as part of their hedging strategies and market-making activities, the idea of one bank holding a position so large it could single-handedly be squeezed to oblivion is highly improbable. The regulatory oversight in today's financial world is designed to prevent exactly this kind of systemic risk from building up in one place. So while it's a compelling narrative, relying on the UBS short squeeze theory as your primary investment thesis is probably not the wisest move. It's more of a market fantasy than a market reality. So if it's not a giant bank on the brink of collapse, what is actually driving silver prices sky high? The real story is arguably even more powerful, and it's rooted in the physical world, not just financial derivatives. The answer, in 2 words, is industrial demand. For years, we've talked about silver's dual nature. It's both a monetary metal, a store of value like gold, and a critical industrial commodity. For a long time, the monetary aspect, the paper market, has been the main driver of its price, but the scales are tipping and the industrial side is now taking center stage. Let's look at the key areas. First, solar energy. The green energy transition is not just a buzzword, it's a global megatrend. Every single solar panel or photovoltaic cell uses silver paste as a conductor. As countries around the world push for more renewable energy, the demand for solar panels is exploding. China, India, the US, Europe, they are all building solar farms at an unprecedented rate. And with each new panel, a little bit of silver is consumed. It's not recycled like jewelry or silverware. It's locked away for the 25 to 30 year lifespan of that panel. This creates a constant growing and one-way demand for physical silver. Next up, we have the electric vehicle revolution. EVs use significantly more silver than traditional internal combustion engine cars. Silver is used in all sorts of electrical components, from battery connections to heated windshields and advanced driver assistance systems. As we shift from gas guzzlers to EVs, the amount of silver needed per vehicle is increasing. Again, this is a long-term structural demand that's only going to grow as EV adoption rates accelerate globally. And it doesn't stop there. Think about 5G technology, all the electronics in your home, and countless medical applications. Silver's unique properties, its unmatched conductivity and antimicrobial qualities, make it irreplaceable in many high-tech applications. This isn't speculative demand. This is real-world consumption by major industries that need silver to build their products. They aren't buying paper contracts. They are buying physical bars and grains to feed their factories. This brings us to the core of the issue, a growing structural deficit. For the past few years, the world has been using more silver than it mines and recycles. The Silver Institute, a highly respected source for industry data, has been forecasting significant supply deficits. In 2023, the deficit was massive, one of the largest on record, and the forecast for 2024 and beyond shows this trend continuing. So what happens when demand consistently outstrips supply? You start drawing down a limited resource, the above-ground stockpiles. For years, there were vast inventories of silver held in vaults around the world, like those in London and at the COMEX. These stockpiles acted as a buffer, absorbing any excess demand. But that buffer is shrinking, and it's shrinking fast. We're seeing a steady drain on these visible inventories. The warehouses are not as full as they used to be. This is the real squeeze. It's not a financial squeeze on a single bank. It's a physical squeeze on the entire global supply chain. Industries need physical silver, and they are finding it harder and more expensive to get. When big players like electronics manufacturers and solar panel producers get worried about securing their future supply, they don't just buy for today. They start buying for tomorrow and the day after, trying to build up their own private stockpiles. This behavior further accelerates the demand and tightens the market even more. The price action we're seeing is the market waking up to this reality. For a long time, the paper price of silver, set on futures exchanges, seemed disconnected from the physical fundamentals. You could have a growing physical deficit while the price languished. But you can only defy the laws of supply and demand for so long. Eventually, physical reality asserts itself. That's what we're witnessing now. The pressure from the physical market is finally overwhelming the paper market. So what does this mean for investors? While the UBS short squeeze rumor is likely just noise, the underlying fundamental story for silver is incredibly strong. The demand from the green energy and tech sectors is not a temporary fad. It's a multi-decade structural shift. The supply deficits are real and are projected to continue. The above-ground stockpiles that have kept a lid on prices are being depleted. This isn't about getting rich overnight based on a rumor. It's about understanding a fundamental shift in a key commodity market. The rising silver price is a reflection of its growing importance in building the future of our technological and green economy. The real story isn't a Wall Street conspiracy. It's a simple, powerful tale of supply and demand. And right now, demand is winning. The physical market is tightening, and the price is finally starting to reflect that scarcity. This could be the beginning of a long-term revaluation of silver, not because of a speculative squeeze, but because the world genuinely needs more of it than it can produce. It's a much more sustainable and powerful bull case than any short-term rumor. Keep your eye on the industrial demand data and the inventory levels in the vaults, that S where the real story is being told. Thanks for watching today, everyone. This is a fascinating market to follow, and it's clear the coming years will be pivotal for silver. What are your thoughts? Do you think the industrial demand story is the real driver? Let me know down in the comments. If you got value from this breakdown, please hit that like button and make sure you resubscribed so you don't miss our next video. Until next time, take care and invest wisely.